So we're now going to do a little bit of Tom's tools. So this is a chart of this is a back-tested chart of Thermo Fisher Scientific, and you can see here that the stock is quite volatile. It moves, but if you take a closer look, you'll discover that stocks move in what I'm going to call directional currents. You can call them channels as well. That's the typical name we use for this phenomenon. And if and by the way, you can see channels at if you climb out 10,000 feet, you can see different channels. If you zoom in, you can find channels within channels. So check this out. There's a sideways channel in this part of the stock chart. There's also a sideways channel in this part of the stock chart where the stock is bouncing off resistance and support and resistance and support. It breaks resistance and then starts rising. It sets another resistance level. Notice right at round numbers, that's typical. Resistance, resistance, support right at a round number as well, 220. All right, so support and resistance trumps every single thing you can put on a chart. And volume comes second. Or you could say volume's first. They're both immensely powerful. All right, so there's some sideways channels in this, you know, from looking at this entire year of data, but you can also see other channels. There's a bullish channel there where a stock runs up in a channel support. We're just connecting these lows, finding a nice support channel. And then we have a resistance channel up here connecting these two highs. That generates a bullish channel there. Now, the thing about these channels is that this stock tends to stay in these channels until it doesn't. Like here, it broke below this lower channel and then started dropping. Here, and I could build a channel there, I just didn't do it. But you're going to see these channels all over the place in a stock chart. Now, fortunately, the tools that we use to find opportunities, Tom's Tools has something called Channel Finder. So the whole idea of Channel Finder is to find stocks that are in channels, providing a higher probability of directional being correct or being right on direction. So, and again, you can trade these channels at different time frames. So on sideways channels, and I'm going to show you how to find these in a minute. Sideways channels, you can use at the money, calendar spreads, butterflies, and condors, depending on the IV. All right. Typically, if a stock is low and depressed, the IV might be high, and you might use butterflies. If the IV is high, use butterflies. If the IV is low, use calendar spreads. Really, really important point. You may want to write that down. But when IV is high, don't use a calendar spread. When IV is high, use a butterfly. If IV is low, use a calendar. It all has to do with Vega. And condors you can use in any environment, really. All right, so that's how you could choose to trade these if you like. And then if you see up channels like I've demonstrated here, I'm going to show you how to find them. If you have an up channel, then you could use long calls. You could use put credit spreads, bull put spreads they're called sometimes, or even out of the money butterflies, or yes, even broken wing butterflies. All right, so there's some up channels, directional trades. Now these trends continue until they stop. The trend is your friend, except at the end. The trend is your friend. This hasn't ended in this chart. Now there's also within this entire chart, there's also down channels. All right. So for down channels, of course, buying a put makes a lot of sense. You could sell an out of the money call credit spread, or even at the money if you like. And then out of the money calendars, put calendars to be precise. Let me do a quick chat poll here. Why would I use an out of the money calendar What's the benefit versus a butterfly? Why not a butterfly and why a calendar if I have a down prognosis? What is the rationale for using a calendar spread in the event the stock drops? Any ideas? What am I after? What am I trying to profit on? IV, correct, John. IV will rise in a down market typically. IV drops when stocks go up. IV rises when the stock price drops, typically, and calendar spreads actually profit from rising IV. Butterflies actually lose a little bit of money, at least temporarily, in the event IV rises. So that's a bit of a roadmap for trading channels. Now, I'm going to take you into the ranker here in a minute. We're going to start playing with it. All right, so this is the channel finder ranker, and it allows you to find sideways channels, sideways and up, sideways and down, up, down, those that are gyrating for 40 days, meaning they're going nowhere, and then even more narrow channels, 5% channel width over different time frames, with 3 to 6 weeks, less than, right around 2 weeks, give or take, and then even less than 10 days. Now, what I want you to also do is consider using this list here, the Penny Plus Weekly. The reason is that those options have tighter slippage. Typically, the stock prices are elevated. They're not $1.50, $3 stocks. They're higher price stocks, which we certainly need if we're bearish. We need the room for the stock to drop. And the slippage is tight. And there's typically weekly options in this list. A lot of these have weekly options, meaning that there's option expirations every week versus once a month. So it's a really important that you take that list. Don't mess around with all optionable stocks and indices. All right. And so when you do this, you select the type of the Penny Plus Weekly, the type of channel you want, then you click the search button. Now, here's a tip. Set a tighter channel when you use this tool. When you go into the wizard criteria of the channel, you click show, and then I want you to do this right here. This is normally 999, and I want you to set it at 5, and that will create tighter channels. So let's go using the channel searcher. I'm going to hop right into Tom's tools. I will go into stocks, stock rankers, channel finder. If you have questions about how this amazing piece of software goes out and detects channels, you can always hit the help button here and you'll see all that you want, including the formulas in some cases used to derive. There's a formula, write that one down. Kidding, you don't need that. These guys think in formulas, so oftentimes the help files will contain formulas, like here, channel width. But this channel finder does a lot. Hit the show button here and you'll see. If you want to dig in, unfortunately we have wizards, so we don't have to worry about all of these. But you can change the start days, the stop days, the direction, the channel width, percent from center line. Now notice it's 999 here, and that's too wide. I'm going to make it 5. That's a trick I learned by playing with the scanner for a handful of hours on Sunday to prep for this. So we have a 5% max channel. Don't worry about the rest of it. Now, the thing is as soon as you hit a wizard setting, let's say we're going to look for bullish trades at the moment. Okay, I can set best up channel. And then if I change this to 5, I'll have to, and then I'm going to go look at down channels. The minute I click down channels, it resets it to 999. So this is something that you have to do with every time you change the wizard setting. So let's look for up for the moment. I'm going to change that to 5. Let's get rid of the detail in a minute. You can look for a longer term or a shorter term channel. I'm going to go for 21 to 45 days. I'm going to go after Penny Plus Weekly stock list, and then I'm going to hit search. And now all this math is applied, and check out some of these stocks. They're awesome. Look at ABC. What? Now, what the software is going to do is give you different channels. And what's cool about this one is Amerisource Bergen has been a longer term. The first trading channel is 58 days and the second 30. And both of these channels overlap, pointing to an extraordinarily tight bullish channel in this stock. Ferrari. Now this one is the longer term channel doesn't slope us up as much, but the 45-day channel, this one does. So this is a good candidate for a directional trade. Now we are at the high of the top of this channel here. That could be resistance. So you've got to still apply further directional analysis, but these are nice bullish candidates. Mendeley's here. Same general story. The 51-day channel, the pink channel, is going up. Well, how about Ulta Cosmetics? Baby. Bullish channel here, but based on the way this channel was calculated, using this high here and those lows there, we're approaching what might be a resistance level at the top of that channel. Now, you've probably heard of Darknet or Alpha 9, and Alpha 9 uses these channel collisions, 3 different channels, and when they all collide at a certain point, that's a major resistance level. Let's look at some of these other ones here, just a few more. Okay, here's Procter & Gamble. Nice. Now, Procter & Gamble has just breached 150. It's in a solid 46-day trend here. But here's a case of what I was saying before. The long-term channel or short-term channel up, the medium-term channel sideways. The resistance level is here, and then the resistance level for this even longer-term channel is here. So when these channels all start to overlap, they can serve as a resistance level. All right, so I can go through the rest of these. I'm going to check Pfizer here real quick. Yeah, that's a good looking stock as well. Pfizer is right at resistance around 53. We are at the top end of this channel here. A breach above it, though, a close above 53 in this case would mean that the stock has now breached this upper channel here and has further upside. So what we're doing here is we're looking at, sort of like currents. We got a big current and a medium current and a smaller current. So does this small current here have enough power to drive the stock up on Pfizer? Okay, let's do the bearish side. Best down channel. Click show. Change this to 5. And then let's hit search. See if we can see some bears, which I prefer. iRobot. Yeah, I mean, this 89-day channel, obviously some news happened. That looks like a buyout of some sort because the stock went really sideways right at 60 for a bit and then started drifting down. And I'd have to do some research, but this channel here is bearish for sure. And this one is a prime example of what could be a darknet buy, because the bottom channel here, the longer term channel, support level there, the support level of the midterm channel, and the support level of the shorter term channel are all coinciding right there. That very well could be a support level and a bounce. Let's take a quick look just for fun, AMLP, to see what it's doing as I speak. Yeah, it's bouncing. It's bouncing. We could see a bounce there on AMLP. All right. So there's the other thing you can do here. Let's look for up channels as well. And I'm going to do 11 to 20 days. We can search for even shorter term channels over an 11 to 20 day channel. And some of the same ones come up as before. ABC is obviously in a nice bullish trend. It did drop on Friday. Okay, so those are candidates. Let's just say for now, I'm going to save these 59 stocks that are all in some degree of an up channel and save them in my stock list. Now, just like last week, once you have a bullish list of stocks, then you can come into searchers and do any number of things, calls and puts. What I tend to do here is I want to say, I want to find the call options on this list of stocks that has the lowest percent to double. Let's hit search and see what's out there. I'm not going to take any calls up until the Fed announcement. It's a little risky. We don't know where the Fed is going to spur the markets to next.